I go long and short all the time, right?
Yeah.
So I mean, I'm looking to short the markets into year end. I'm kind of hoping for a year end rally because I want to get better opportunities on my shorts.
Yeah.
But yeah, I think that this is a market where it's so volatile that swing traders.
In this video, Gareth Soloway makes a new Bitcoin price prediction that, if you act when it occurs, may make you wealthy. If not, you could lose everything. Gareth Soloway, Chief Market Strategist and CFO of www.inthemoneystocks.com, has been a trader for more than 20 years and is now a specialist in charts and future forecasts. It's crucial to understand when to purchase and sell cryptocurrencies like Bitcoin and Ethereum in the market. Gareth thinks that Bitcoin could break higher and kick off the upcoming cryptocurrency boom. That's the most recent estimate by Gareth Soloway on the price of Bitcoin in 2022. But until we hear from Soloway, if you're new to the channel, be sure to subscribe. If you haven't already, so we will provide daily content to keep you updated on the latest news.
I think, unfortunately, regulation at this point, right? And again, it's so weird because so many of the things within crypto were never let it be regulated. That's the worst idea in the world. And then you see something like this happen and people lost, millions of dollars. Many smaller accounts lost $5,000, $10,000. And now there's a real understanding of why you need rules, why you need transparency. Why is it so important that there are audits done and then the audits are released to the public? And I think that's going to be the key. Once you get transparency in the crypto market, big money will come back. I mean, there's definitely this interest, and we've seen it from big names like Kevin O'Leary and Mike Novogratz and different players like that. They understand the need for crypto. They understand the need for Bitcoin, but there's no way they're going close to any projects now until there's that regulation. I think it will actually put in the bottom. So I think that's going to be the key, right? Is that, and the bottom's not going to be like a V-shaped recovery. It's not going to all of a sudden go just magically back to 69,000 or above. But what you're going to get is this beginning of confidence building as reports and transparency documents are released, where big money says, okay, now I feel safe to begin to invest millions or even more money. And that'll be a big change in the industry, where all of a sudden, imagine that pension funds feel comfortable enough to invest 1% of their assets. Right there, you probably have a $100,000 Bitcoin price when it gets to that point. So that's going to be the key is you at this point, which is, again, it's so crazy because there were so many people that were just raging against regulation. But if you actually want crypto to go up, you now need regulation. So the latest calculations I've done and analysis is that you're likely going to see the bottom around May of 2023.
Okay.
So the reason I came up with that is I compared the FTX scenario, the collapse there, to the Lehman Brothers collapse in '08 in the financial crisis. And there's a lot of weird similarities there. Lehman Brothers being a big bank, the exchanges are kind of like the banks of crypto, right? That's where you put your money. That's where you leave your money. A lot of them were paying different amounts of interest, if you will. So when that collapsed, just like Lehman Brothers, I looked at the charts. And what we saw is that the S&P 500 in 2008 took 6 months to bottom. It dropped another 40 to 45%. So I extrapolated that out with the FTX drop and said, okay, 6 months approximately and about a 40 to 45% drop in Bitcoin. It puts us right around $9,000, give or take, and it's right around that May-ish 2023 timeframe. So I'm going with that for now. And as we always know, there's new information that could come out, so it could change a little bit. But that's kind of what I'm zoning in on. I mean, I think initially when we were at 69 and I said 20, I mean, that was the obvious pivot point because it was the 2017 high. Once we got down there, once I started to compare the crypto markets to the .com collapse, that's really where it started to be like, okay, Amazon and the .com collapse went down 95%. So every past bear market with crypto has gone down 80 to 85. At 20,000, we weren't even down 80 to 85%. So as we got to 20, it started to make sense that we'd probably go lower than 20. And now it's looking like that 9-ish thousand area is the likely target. I go long and short all the time, right?
Yeah.
So I mean, I'm looking to short the markets into year end. I'm kind of hoping for a year end rally because I want to get better opportunities on my shorts.
Yeah.
But yeah, I think that this is a market where it's so volatile that swing traders are just having a field day. Like, this is really, it's been the long-term investors market where the Fed has always been there to bail everyone out. And then so long-term investors could just buy any dip and hold. Well, guess what? Now the Fed's not doing that. And so it's going to be what we call a swing traders market. There's millions and millions of dollars to be made by just going long and then selling on the pop and then shorting and buying on the dip and doing all that kind of stuff. But it's a nimble traders and investors game now. I think the sentiment for the most part in the markets overall is slightly optimistic, right? And it's just changed recently because the Fed has started to be a little bit more back offish on their hikes. On the swing trading side, I mean, any good swing trader tries not to have too much of a bias because we just like play price action. So if something pops too much and goes into resistance, we're shorting it. And then the next day we might cover our short and go long if it falls a bunch, right? So that's the beauty of being more of a trader. Bear markets offer the best opportunities. Like literally, I mean, look at Bitcoin, right? I mean, there are people that buying Bitcoin at 65, 66, 69,000. And here we are in a bear market and you can buy it at 17 right now and probably cheaper. So always remember that while bear markets can hurt, they do offer the best opportunities. And you could go back to like the financial crisis in 08, 09. In March 09, there was like, I mean, you could have bought Bank of America for like $2, right? And I mean, just incredible levels because there was so much panic and so much uncertainty in the markets. And obviously we know where those stocks are now trading. It's been an amazing run. And there were so many stocks like that. And so bear markets, again, when panic hits, people sell first and ask questions later. If you can be a level-headed robotic trader or investor, you buy that panic and then enjoy the ride. I have a small position, just basically. So I started my first HODL position in Bitcoin. It was around in the 17s, I believe. And basically, I what I do is, and this is anytime I'm doing almost any trade, I figure out first how much to allocate to that trade, even before I buy anything. I say, okay, I'm going to allocate X amount of dollars. And then what I do is I basically chop it into even amounts. So in this case with Bitcoin, I did it sixths. So I took 1/6 of that money and I picked it up there. And the reason why I did that, even thinking Bitcoin's going lower, is that as much as I might think it goes lower, it may not. And so I want to have a little skin in the game. We're low enough now where I'm okay starting to inch in. And what I'll do is I'll basically buy another 1/6 every 3,000 down. So 17, maybe below 15, I'll buy more, maybe below 12, below 9, or around 9. And this way I'll dollar cost average. And really dollar cost averaging is the best way in the world to kind of have exposure, but keep emotion out of the trade. Because, you know, in a weird way, like I hope Bitcoin does go lower because I only have a 1/6 position, you know, like good, I hope it goes lower, you know, and you kind of use that mentality to not be concerned. Like if it goes to 1 million now, okay, I have a 1/6 position. That'll be worth a lot of money. If it goes lower, I just accumulate more. At this point, I'm not sure there's a whole lot. I think that the FTX scenario really killed the institutional money. Like even though institutions weren't going crazy in crypto, there was some, right? I mean, there's definitely some big players that were involved in crypto. And now it's like, I mean, so other institutions or institutional investors watching other players get crushed in something, they're like, hands off. That I don't want that. I mean, especially with like some of the vitriol in social media against some of these people and like where they paid this, where they did this. I mean, it's just like, why would you even, if you got like $100 million, why would you even want to deal with that at this point, right? So I think that's the biggest thing, is that it's hard to imagine that we'd get any sort of a real bottom without regulation. But I do think that the regulation is a no-brainer. Like this is the beauty of politicians, right? Politicians have a lot of bad issues and things that they do, but part of that is that they want votes, right? And now that people got burned in crypto, there's this thing like, oh, I'll look the hero for getting some good transparency in there, right? It's now the popular thing, and so you probably will get that transparency via regulation. I basically just use 10% of my investable money, right? And that's not even all in the market, so it's very small, you know. And again, part of it is that crypto is a tricky scenario because, number one, the smaller projects, they're the ones that can go crazy, but there's no liquidity in them for the most part. And so that puts a big amount of risk when you're using a decent amount of money. With the bigger coins, you can use more money, but there's still a lot of risk, as we know, right? I mean, an FTX scenario, a Terra Luna scenario. And so for me, it's still saying, okay, the stock market, there's so many different stocks. There's so many blue chip stocks that can be gone long or short. It just gives me more opportunities, and it's kind of my safe place for now. Doesn't mean it will be in the future, but for now, that's why I limit my amount in crypto. I mean, I'll swing trade the top 25, but
okay.
really for like long term, it's just Ethereum and Bitcoin.
Do you agree that price doesn't matter in the short term? Leave a comment if you found the content interesting. Click in like button. It really helps the channel find viewers similar to you. If you're new to the channel or haven't subscribed to it, click in subscribe button. We post content daily to keep you up to date on the current market and news. Thanks for watching. See you in the next video.